We've got Enzio von Pfeil, who's an independent economist and a macro strategist. He joins us on the show from Hong Kong. Now, Enzio, to begin with, the General Anti-Avoidance Rules, or GAR as we call it here, which come into effect next week, will mean that the tax department will have the right to deny individuals and entities the benefits of any tax avoidance treaty that may presently exist. What do you believe the impact will be then on capital flows, particularly foreign investor portfolio flows?
It's going to spell disaster for foreign inflows into India, because there are at least 6 other firms that will be affected by this flip-flopping. Firms like, what we're told by the press at least, GE, AT&T, Saab, Miller are just 3 that spring to mind. So I'm afraid that it's going to really rattle the cage of fund managers who decide to buy into India, as well as direct investors who decide to put plants into India. It's going to make it very difficult for them to get this through their own investment committees.
Right, and Enzio, just looking away from the GAR issue and focusing on commodities, what's your view on oil for the next financial year? That's April to March of next year. Do you think the movement in oil prices is linked to only geopolitical risks, or do you anticipate that oil prices may correct owing to slower demand coming from Europe and even Asia? Is there any case of lesser investments in oil that may keep oil prices elevated in future?
I think that there will be a short-term correction for this reason that you just cited, particularly with the slowdown from Europe. But I also think that there's very little, according to my research, there's very little linkage between the oil price and global growth. And that's because the oil price is a political price. So I do value the geopolitics of oil very highly, and I'm afraid that there's going to be something bad happening in Iran. This is my view, and if I'm correct with that, then I think the oil price will spike back up after an initial downward correction.
Enzio, how are you reading into the rupee, and what's the trajectory that you're panning out? Do you think that it could breach the lows that we saw last year? How do you think it's going to perform versus the dollar, as well as some of the other Asian and emerging market currencies?
I think so, because the stock market in India really peaked on February the 16th and has been, March the 16th, I beg your pardon, and has been sliding since. And that's, of course, been exacerbated by this ridiculous government move on March the 16th in the budget to try and curtail or to try and tax foreigners for half a century going back on the income derived from their subsidiaries in India. So I'm afraid that the rupee is going to be hit by that, because there will be less portfolio inflows and less direct investment inflows.
And Enzio, in light of the GAR issue that we just spoke about a while ago, what do you think will be the quantum of capital flows that we can anticipate for FY13? Will they moderate, and what do you think the key risks are to India's capital flows going forward?
Well, the key risk is going to be that nobody knows who is in charge in India. You see, you've got the Supreme Court having ruled that Vodafone can in fact not have to pay these taxes, the $2.9 billion on its Hutchison SR deal. Then you, however, have Parliament saying, well, hang on, by the end of May we want to decide what should be done. And then you've got the government jumping in the middle of all this on the 16th of March, saying that they too want the Vodafone people to pay up this $2.9 billion in back taxes, and they didn't get anywhere with the Supreme Court. Now, what I'm deliberately confusing your audience with this is because it is very confusing. Nobody knows, and as I said before, it's going to make it very difficult to push investment proposals through investment committees, and that in turn is going to hit capital flows, particularly portfolio inflows into India and foreign direct investment inflows into India.
Right. And Enzio, what's your outlook on India post the budget? Are you comfortable with the fiscal deficit number that the government's spoken of, the 5.1% number? Do you think India would be able to achieve this target? And again, what's your view on expenditure and also the financing of the fiscal deficit?
Well, it's currently about 6%. I'm afraid it's going to be going up, because with the policy flip-flops that I just outlined, it just appears to me as if you're going to find even less growth coming into India from abroad. In other words, less and less technology coming in from overseas companies who are scared about how much they're going to be taxed by the Indian authorities, and they're very scared by how this government will flip-flop on its tax policies. So my view would be that the the capital inflows will reduce quite considerably, that the spending will have to increase in order to compensate for the slower growth. And that spending increase means that the budget deficit to GDP will range from 6.5 to 7% of GDP, not the current 6%.
And Enzio, does the government borrowing program look challenging to you? What's your outlook as far as bond yields go in light of growing inflationary concerns going forward?
They can only go up, but the bond yields will go up less because of inflation, which is cost-push driven. The bond yields will go up because very few people will really want to buy a depreciating rupee. That was what we were saying before, that the rupee will be depreciating because of less capital inflows on the portfolio and on the direct investment side. And that then in turn suggests that they're going to have to make those bond yields ever more attractive for foreigners to come in. And I'm afraid that the capital financing program that they're going to be trying to launch from overseas is going to be a little bit tricky to push through because of this flip-flopping by the government.
And so, do you think that India will be able to achieve 7.6% GDP growth for FY13? And when do you think a substantial reversal in India's investment growth and industrial growth is likely to happen?
Absolutely not. That is far too strong. It's been hovering around that 7%, moving down to 6%. You have capital investment as a percentage of GDP going below 14% of GDP. You have earnings slowing down in India. So you have this flip-flopping by the government. You have higher interest rates. You have a bad economic time, an excess demand for money, excess supply of goods coming through India. So my view would be that GDP is going to slow down. I'm looking more at 5.5 to 6 at the outside.
And lastly, Enzio, what's your outlook on India's equity markets? Which sectors look attractive to you?
I'm rather bearish on the markets. I think that downturn that we've seen since the 16th of March will continue because of the flip-flopping, because of the worsening growth prospects. I suppose that I would be in those idiot-proof sectors like utilities, maybe telecoms, having just rattled on about Vodafone, but I do think at least there's some juice left in that sector in terms of the overall earnings stability. People need to telephone regardless of where the economic cycle is headed. Definitely I would be trying to short the cyclicals because I think that the economic growth is going to go down, worsened again by this flip-flopping by the government on the 16th of March.
Enzio, thanks very much for giving us that perspective on the global markets as well as what you're anticipating for our markets back home.